What's going on, guys? Brian's here. Today's Monday, September 9th, 2024. Welcome to my YouTube channel if you're new here. Let's dive right in, and I want to discuss the importance of not taking one single aspect of the markets in isolation. That means if you have some sort of secret indicator or something that might be telling you, hey, the market is going to go higher. In this case here, this is the weekly expiration max pain on the SPY, which is at 549. If the market is here and you're looking at a blank chart and the only thing you're looking at is some secret indicator that's telling you, hey, the market's going to 549, is this a good time to enter the trade? This is where it's important to layer context whenever you're deciding if you want to enter. What I mean by context is if we were to zoom out for a second here, let's just take a look at this bear chart with some price action. What do we know? The basic principles of trading: support and resistance. This was last week's previous supports. It broke down on Friday, and this is the first retest. Previous supports is likely to act as future resistance. That means if there's one data point just from reading price action, this does not look like a good time to be long. Even if the market was to keep going higher, you have to ask yourself, is this the type of trader you want to be? Is this the type of setup you want to take? This, by my playbook and in my experience, is never a trade in which I'm interested in taking. On top of that, let's add a little bit more context around this. So we have this previous support that became future resistance. What's another aspect of support and resistance in the market? Trend lines. Let's take a look at this loosely drawn trend line right here from last week. What do we have? A little bit of resistance here on this retest, and this is price action coming up to it. So now we have two data points that are showcasing that this is probably not a good place in which you want to be long. If you're curious as to, well, what would you do to be long, you can wait for price to break past this resistance, then maybe retest this or even retest this trend line, and then look for continuation up to your target. But at this point in time, when the market is right around this convergence of this previous support turn resistance level and this convergence of this trend line right here, this is not really a place you want to be long. Before you add anything complicated or advanced like gamma exposure, I know I like to talk a lot about that on this YouTube channel. Before you start looking at all sorts of crazy statistics and 2 sigma levels and all the extra stuff, just always start with something simple as price action. Price action is king, and being able to understand where there's sentiment in the volume can tell you a lot about a chart. And there is nothing on this chart but volume as an indicator and these candlesticks. Those are the only indicators essentially on this chart. And that can already provide maybe 60-75% of the context in which you need right here. This is the thought process here, real time. As the market is rejecting this level, we see the first 15-minute candle close. The market has been up for a few 15-minute green candles right into this area of confluence. You have to ask yourself, is it worth the risk relative to how much reward is left? If the market is only going to go up to maybe here or here, is it worth the risk? And that is something you should always ask yourself. There's been a decent amount of entry around the quant trading app proprietary power strike, so let's just jump right into it, and that's coming from the SPX Trade Engine right here. And this is around that point in time. So we see that the market has come up to this level. This is the power strike. This is our max pain strike, 0 DTE, and this is our absolute gamma strike. It seems like the perfect trifecta at this point. Everything's pointing to 500, 5,500 on the SPX. But does it make sense to go long here? What are you realistically risking? Where is your stop loss? In this case, if you said maybe your stop loss is right below this candle here just because we broke above the highest positive gamma strike, fair enough, that's fine, because at this point you're maybe risking not even 5 points on the SPX, maybe 2-3 points, and you're looking for potentially another 20 points. That's a great risk to reward ratio, but that's a very tight stop loss, and the odds of that working on your favor are pretty slim. You're likely to get stopped out before you get your reward. But let's also take a look at earlier in the day. The power strike was also flashing down here. It was showing 5,400. It was showing 5,500 a couple times. It was up and down. It was all over the place. Meanwhile, the absolute gamma was in between. It was right at the neutral strike for a decent portion of the morning here. This is where being able to layer context can keep you out of trouble. It's very easy for new traders to scour the internet, come across something cool, and then think it's the holy grail or think it's the only thing they have to look at to trade. That's not how the market works. This is just like any other tool. Now, it's been very accurate and it's been amazing, but it's not the only thing you want to base your trading decisions off of. You can't throw away the fundamentals of trading, which is support and resistance and some trend lines, and then some context, and then thinking about risk versus reward. The power strike, the absolute gamma strike, the max pain strike. We could have had Jerome Powell holding a press conference saying the market's going to 5,500, and you still have to ask yourself, is it a trade? That's good. What is the setup? What is the chart telling you? Is it worth the risk? That's what's more important. You guys that are at Quant Trading App Gold members, look at the huge elephant in the room. We are right here at the weekly resistance level. You also have to ask yourself, does it make much sense to go long right at the weekly resistance level? We're now starting to see the first red candles forming. This is already showing signs of the momentum has slowed down from this intraday trend. It came right where it's supposed to happen, right at that weekly resistance level. For those of you that are seeing this on YouTube, this is coming from the Quant Trading App scripts. So I'm just going to turn these off, turn these on. Everything that's on my chart here is coming straight from the scripts, and these are generated at the start of the week, these weekly levels, and these are the intraday levels that are formed just for the 0DTE. We already had a really nice opportunity here earlier in the day off of the 2-day anchored VWAP. You guys know this at this point, especially if you've been watching my YouTube channel for a few years. What do we have? A downtrend, and then we get a gap up, a really nice gap up. And what happens when price retraces back to that 2-day anchored VWAP? After a downtrend, we usually get a bounce. On top of that, not only do we have the 2-day anchored VWAP, but we also had the Quant Trading App intraday zone right below it to offer some sort of potential support. A member in QTA is able to identify the textbook support. This is our 50% retracement. I missed that trade as I was not looking to take any 0DTE trades today, but this is a textbook setup. This is why I like to share these trade examples, and I essentially share my playbook on YouTube so you guys can know exactly what I look for. This is that 50% retracement. This was Friday's low. This is our gap up. Let the morning momentum carry price up. When it retraces, if we retrace to the 50% level, the 2-day anchored VWAP is there or the intraday zone is there, we generally get some continued momentum to the upside. There are so many examples of this. This is one of the earliest examples in the Quant Trading App playbook, which was derived directly from my playbook before developing Quant Trading App. As when I was mostly a momentum-based trader, this was one of my textbook trades, again, before Quant Trading App. QTA just added more context to my price action. Now, if we turn off all the studies again, what additional context do we have? What do we know? We have our weekly gamma exposure levels. These are the levels I like to plot at the start of the week. So in this case here, it's a Monday. So as soon as the market opens, I run my gamma exposure profile for the week, and then I plot my levels on the chart, and I essentially have my roadmap or my blueprint for the week. In this case here, what do we have? This is the second highest positive gamma strike for the week. Also right here at the low of day, offering some additional context or additional support, additional confluence, whatever you want to call it. This is where you should be asking yourself, hey, where's the power strike? Where's the absolute gamma strike? Is there enough context or enough confluence to be long here? Do I want to be long here? Is it worth the risk? Is this a setup that I can identify? Is this a setup in which I know to trade? Is it a setup in which I've seen before? This is where you want to be interested in being long. And if you want some additional confirmation, then maybe wait for price to get back above VWAP and then set your stop loss below that previous candle, and you're riding it essentially up to the intraday zone or the next sensible resistance. And that can come from gamma exposure. It can come from a trend line on your chart. It can come from any type of resistance on your chart. This is where you stick to the basics. At this point, this is price breaking back over the neutral strike. This is the absolute gamma strike bouncing up. This is now we have confirmed strength as price has reclaimed VWAP on our chart. That's what's happening here. This in a sense can be your entry. The data is all here, so you can go back in time and see what was it looking like. You can also take a look at what was the gamma exposure looking like at that point. Is a ton of gamma around here, hence why everything is pointing towards 500. It won't be a surprise if we see 500 this week on the SPX. The market was down over 3.5% last week. It's not common, so it's naturally going to have some sort of relief bounce. So a lot of the data is going to be pointing to that level. You want to ask yourself, do you want to enter when the market's up here, or should you be looking to enter when it's down here? That's all for today's video, guys. This video will be released to the Quant Trading App Gold members before it's released to the public on YouTube, just because a lot of these levels here are proprietary. A lot of them are for the Gold members. I don't want to release all the information for the week, as I want to be fair to the Gold members in Quant Trading App. However, if you learned something, leave a comment down below. If you enjoyed the video, like it. If you're interested in Quant Trading App, link is in the description to find out a little bit more about the levels, to find out a little bit more about QTA in general. I have a lot of other videos on this YouTube channel in which I've gone over daily recaps, I've covered gamma exposure, and I've covered the Quant Trading App proprietary power strike and this trade engine. The information is in the previous daily recap videos. Thanks for watching, guys. Leave a comment down below, and I'll catch you in the next one. Take care.